Welcome to this week's edition of What the Howell is Going On. This is a spooky one. Tomorrow's going to be Halloween. I wonder how many kids are going to be missing Halloween to be prepping for the Jays game. Go Jays! What is happening in our local real estate markets? First of all, I'm going to start off with some updates from on the Bank of Canada front, on the economic front. I've got a document here in front of me from RBC Economics, and Bank of Canada warns of structural economic damage from tariffs. The Bank of Canada delivered an expected 25 basis point rate cut yesterday, lowering the overnight rate to 2.25%. So that's good news. That's some support for the economy. The bottom of their neutral range. So at the bottom of the neutral range, what that means is it would not add or subtract from inflation pressures over time. So the bank has emphasized, though, concerns about structural economic damage from trade disruptions, reducing the effectiveness of monetary policy. So monetary policy is affecting the interest rates as a tool in addressing weakening demand when maintaining inflation control. So I don't expect that we'll be dropping any further in the near term based on this information. In simple terms, though, as the economics capacity shrinks, it will become increasingly difficult for the Bank of Canada to lower interest rates to stimulate demand without risking that the demand will exceed what the economy can produce, thereby causing inflation. So what has to happen? Well, the government will switch to fiscal policy. They'll be focusing on taxes and government spending. So we're in for some interesting times in the coming months. At the moment, though, the interest rate cut is welcome. I think that's gonna help in the short term to stimulate the real estate markets, to get us some more volume, more sales, and help to put us into a better position for the upcoming spring market. Because this year has been a ride, to say the least. It's been a roller coaster. So, what is specifically happening in our RE/MAX Escarpment RE/MAX Niagara Appointment Center? This tells us some insights about the demand side of the business. In August, buyer confidence jumped immediately after the Bank of Canada held its target overnight rate steady at 2.75, where sales ran 20 to 30% above 2024. While the September cut gave only a short bump before the October pullback, the fall market is driven by rate headlines, not fundamentals. Sellers still hold leverage under $900,000. So where there's a lot more demand in the less than $900,000, a lot more buyers can afford in that price range, the sellers are still holding some clout, some negotiation abilities there. While the buyers remain selective and rate sensitive, that area of the market is thriving. With this week's overnight rate cut, we expect a brief 10 to 15% rebound in sales volume into the early winter. So that's good news. The real recovery, however, was going to depend on fixed mortgage rates moving lower. So fixed mortgage rates are impacted by the bond yields, not the Bank of Canada policy rate. Eventually, the policy rate can impact the bond yields because it does impact the short term. So it's going to be interesting to see what happens on the fixed mortgage side of things and the bond yields, because if the fixed mortgage rates start to come down more, that's going to really stimulate things and help to stimulate a good, strong spring market. In terms of the appointments, it's taking on average 10.2 appointments to get a property sold. Last week's number was 11.6 in terms of that stat. What's happening specifically in our local markets? In the Burlington area, numbers of listings has come down somewhat. It's at 691 listings now, down from 713. The number of sales in the past 30 days has also slowed down a bit. And we've got about 4.5 months worth of supply. We're still tracking along at buyer's market territory with 41% on the absorption. That's based on the last 30 days. It does seem that the detached homes are performing the best from what I can tell here. And median days on market, 23, average days 39. This is based on successful sales that are actually going through. Cumulative average days on market, however, is around 68. So if we factor in cancels and relists and all these types of things, a bit longer on the market. Most successful transactions are seeing negotiations in around the 3.5% off from the list price mark. Hamilton area, the number of listings is down slightly, fairly similar, but down slightly to last week. Number of sales in the past 30 days also down very slightly, pretty similar to last week. Over 6 months of supply, though, in Hamilton right now, which is a ton. Then we're a stronger buyer's market in Hamilton. So definitely favoring buyers, where Burlington's looking a little more balanced, pushing toward the balanced market. Hamilton's definitely in buyer's market territory with an absorption rate sitting around 35.8% right now. Median days on market is 28, average of 42 days on market. And the cumulative number is 74 average days on market. We're seeing negotiations taking place for most successful trades in Hamilton, just over 4% off of the asking price. In the Oakville area, number of listings down slightly, and number of sales in the past 30 days also down slightly. We've got over 5 months worth of supply in Oakville still, and it's still a buyer's market territory there in terms of the absorption rate, 42%. But it has been inching up, so it's starting to perform a little more like Burlington, starting to approach a more balanced market in Oakville. Median days on market is 25, average days on market is 33. Cumulative days on market average 69. We're seeing about 4.7%, so a bit more negotiating going on in Oakville, a bit more coming off the average asking price based on the median information that we have here. The key in the current market is to prepare your home really well, make sure it stands out from the crowd in terms of nice and clean, well staged, everything else, and make sure you're using precision pricing. Basically price your home properly and allow for a bit of negotiating room, but don't overprice your property. That's all I got for you today. See you next week.